Guys, this is S&P 500 weekly technical analysis for the week of June 9th. Now the S&P 500 has entered into the absolute bullishness or in the absolute bullish trend on the weekly chart. And this is something that was not expected back in April or even in the month of May. But because of the formation of a good green candle on the weekly chart, the moving averages have now finally given a bullish crossover. So what does this mean? That the absolute bullishness or the bullish trend? This means that now at least for next 2 to 3 weeks, S&P 500 has come into a condition or has entered into a condition wherein any fall is expected to be limited and we can anticipate or expect more bullish movement. However, there is a catch. The catch is that S&P 500 is reaching to the point where we are expecting a failure or a fall. And this failure or the fall is not because of any technical compulsion or through any technical indicators. It will be because of the natural movement of the stock market. So this failure or a fall will be a break in the bullish movement. That's it. Okay. And also because now the absolute bullishness or the absolute bullish movement or the absolute bullish trend is there. That is why this fall is also expected to be limited. And other than that, the most important achievement of the stock market or especially the S&P 500 was the closing above 6,000. So the closing was at 6,000.36, and this is something that is going to change a lot of things. And also because of this closing above 6,000, now we are anticipating on Monday either a gap up open or irrespective of any open, there will be an initial or intraday bullish movement on Monday. As simple as that. Now, to what levels this the absolute bullishness can be seen and from where we are anticipating a fall or a break in the bullish movement, and then to what levels or the zones this fall will be limited. Other than that, the all-time high of the S&P 500 was 6147. So how soon the S&P 500 can achieve this 6147? So I am going to discuss all of this in detail in this S&P 500 weekly technical analysis. Now guys, let me tell you very quickly the agenda of this S&P 500 weekly technical analysis. That I have divided this S&P 500 weekly technical analysis in these three parts. First one is the S&P 500 technical analysis on the weekly chart. Weekly chart means the trend. Okay, and as of now the S&P 500 has entered into the absolute bullish trend. However, this absolute bullishness is not seen in the Dow Jones. So I will show you the weekly chart, the weekly candles, and I will tell you that how it is going to work in the coming weeks. The second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, S&P 500 is still 80% bullish. It is not 100% absolute bullish because the MACD on the daily chart is still trading bearish. Okay, so I will show you the impact of this, the bearish MACD on the absolute bullishness through the weekly chart. Third point of the agenda is the probable movement of the SP500 from June 9th, which is Monday, through June 13th, that will be Friday. So I will tell you that how the S&P 500 is going to move and is going to behave. Like for example, first it will move up to what level, and then it will come down. But when it comes down, then what will tell us that actually there will be a fall or not? Okay, and if there will be a fall, then to what level, and then will be a reversal to what level. All of these conditions, bullish, bearish movement, levels, zones, each and everything I will discuss in this, the third and the last point of the agenda. And guys, let me tell you one more thing. All of these three sections are interrelated, are interconnected. So when I say the probable movement, by the time I discuss the probable movement, the third point, I have already covered or discussed the 30 to 40% of the probable movement in the first and the second point of the agenda. This is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the S&P 500 and in a manner to the entire US stock market in the next week, means the week of June 9th. So guys, now we are here and this is the first point of the agenda and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay. So now let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay. One candle means 1 week. Now, when you look into this, the last weekly candle, it's a good bullish weekly candle, good bullish candle. There is no defined shape of the candle. Okay. And in this manner, this candle simply indicates an initial or intraday bullish movement on Monday. That's it, nothing else. However, the S&P 500 has closed above the 6,000 mark. Okay, because of this special closing above the 6,000 psychological mark, psychological, this is the barrier. Okay, we can also anticipate a gap up open. So this means that now on Monday we are anticipating a gap up open, or irrespective of any open, there will be an initial or intraday bullish movement on Monday. Now comes the Dow Jones. So Dow Jones will give us more clarity. Okay. Now if you notice, the Dow Jones, again, the last weekly candle of the Dow Jones is a good bullish candle, but there is no defined shape of the candle. Okay. However, the most important part is that the Dow Jones has closed above my strong resistance level, that was 42.7xx. Below this, the last closing. So this, the closing was 42,762.88, and my calculated heavy resistance level, which will now act as support level, was below this mark. Okay. So in this manner, we are now anticipating an initial or intraday bullish movement on Monday, but no gap up open. Through the Dow Jones, gap up open is not seen, is not confirmed. Okay. But yes, initial or intraday bullish movement is expected on Monday through the Dow Jones. So considering both of these the cases, S&P 500 and the Dow Jones, irrespective of anything, there will be an initial or intraday bullish movement. But in the S&P 500, see, you need to understand that the structure of the S&P 500 is different from the Dow Jones. Okay, so that is why we can anticipate a gap up in the S&P 500, but Dow Jones is not confirming any gap up. Okay, just the initial or intraday bullish movement, right? So this was through the candle. Now let's analyze the technical indicators. Okay, so through the technical indicators, you will be able to understand, or you will be able to see the major change. Okay, now through the technical indicators, S&P 500 is bullish on the weekly chart through the MACD. S&P 500 is bullish on the weekly chart through the Bollinger Bands. S&P 500 is bullish through the moving averages on the weekly chart, which it was trading as neutral until last week. Okay, this is the major change. Then comes the other technical indicators. So S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. It is neither overbought nor oversold, no saturation, nothing. Okay, this means that the S&P 500 is 100% absolute bullish on the weekly chart. This is why again and again from Monday itself, okay, until yesterday, I kept on mentioning in my pre-market analysis to my Patreon community members that technically the SP500 is 80% bullish on the weekly chart. And when the S&P 500 yesterday at the time of closing confirmed that there will not be any more fall, and there is no condition wherein we can say that there will be a bearish slip in the moving averages. So at the end of the day, it was very much clear that now the S&P 500 is 100% absolute bullish. Now let's analyze the Dow Jones. Dow Jones is bullish through the Ichimoku cloud on the weekly chart. Dow Jones is bullish through the Bollinger Bands on the weekly chart. Dow Jones is neutral through the moving averages on the weekly chart, because still there is no confirmed crossover in the moving averages on the weekly chart. Now other than that, the Dow Jones is bullish through the MACD on the weekly chart. Dow Jones is bullish through the stochastic RSI on the weekly chart. Dow Jones is also neither overbought nor saturated. Okay, nothing like that. But in this manner, the Dow Jones is 80% bullish on the weekly chart. Now, what we have seen here is that the S&P 500 is 100% bullish. Okay, Dow Jones is only 80% bullish. So, does that mean that there will be a problem or there is a problem? As of now, no. As of now, no, no, no. There is no problem because now the moving averages have come into a condition wherein if there comes one more green candle, a good green candle in the next week, in the Dow Jones, then Dow Jones is also expected to give or to get a confirmed bullish crossover through the moving averages. Once the Dow Jones also turns absolute bullish on the weekly chart, S&P 500 is already 100% absolute bullish, then in that case we can anticipate 6147. What is 6147? 6147 is the all-time high of the S&P 500 formed on 19th of February 2025. So now if the S&P 500 has closed above the 6000 on yesterday or on Friday, then why I am saying that the 6147 might take some time. Okay, so there is a valid reason for this, the 6147. Okay, and what is that? So let me discuss that reason here. Now you need to understand, okay, there are a couple of reasons. The first one is obviously the Fed's, okay, the Fed chairman himself. Because yesterday when the unemployment and the non-farm payroll data was released, then all of a sudden then immediately everyone started to anticipate that at least for next 2 to 3 months, there will not be any rate cut. So Fed. Now other than that, one more thing, recently the Feds have added, and that is the recession. Okay, recession. So this is the first time that the FOMC members, the Fed, regional Fed presidents and the Fed chairman, they have added that a recession is anticipated in next 6 months or around November or before November, December. Okay, a recession is anticipated. There is a disconnect between the stock market and the real economy. Okay, see, 6 months recession time is for the economy, not for the stock market. Okay, that is for the economy, right? And now we all know that economy is slowing down. The GDP, we have seen recently the contraction. Other than that, all of the data indicates that the economy is slowing down. Okay, now stock market will react much before November or December to this, the recession. That is why now the stock market is waiting for the next Wednesday. Okay, that will be around 18th, 17th or 18th of June. Okay, Wednesday, when the FOMC is scheduled, and also the SEPs, the projections will be released. This is one thing. Now the second thing is that this is to the historical patterns. Okay, what does this mean? This means that, okay, so we need not to look into much that. So if you notice, when the stock market was moving up, S&P 500 was moving up. Okay, this was the high 5669.67 or 5670 was the high. Okay, then the S&P 500 came down back to back, heavy pressure, fine. Then it again started to move up. Okay, it again started to move up, and then it made a high at 5651 below 5670, and then there was a fall, and then it took another week or 2 weeks to clear this, the 5670. So what I'm trying to say here is that now the S&P 500, see, first of all, there is a huge disconnect. Okay, a disconnect between the real economy and the stock market, and the stock market is simply avoiding, ignoring the Feds. So now, so that is one point. But now S&P 500 has recovered strongly from the low that was 4835, 4835. But if you are my Patreon community member, then when the S&P 500 was coming down to 4835 or so, then I mentioned that there is a very strong support at 479x slash 482x. This strong support will handle any kind of fall, and then there will be a bounce back from here. Okay, a good recovery or a good bullish retrace from this zone, 479x, 482x. However, S&P 500 never hit the zone, the 482x. Rather, the low was 4835. Okay, just a few points, okay, before it could have hit the 482x. Okay, there was a strong bounce, and now we are seeing that S&P 500 is back to the 6000, okay, the 6000 levels. And the all-time high of the S&P 500 was 6147 on 19th of February. Okay, now S&P 500 is reaching to near to this the all-time high. So what should happen, or what happens? Okay, in this case, generally, like more than 90 or 95% of the times, what happens in this case? Before it can actually hit the 6147, there will be a break, there will be a fall. Okay, this is how it works, and it is not just related to, or it is not just applicable to the S&P 500, but it is applicable to any stock, any index, not just the US stock market, okay, but the global stock market. This is how it works. Whenever any stock or any index, okay, when it reaches near to the all-time high, then there comes a natural resistance, okay, before or much before that the all-time high. This natural resistance, you will notice that it will then create a fear, some kind of fear, okay, that will be there, and then because of that there will be a normal fall. Sometimes that fall is heavy, very heavy, okay, but most of the times that fall is normal. Okay, now where we are anticipating this to happen? We are anticipating it to happen in the 6000 range itself, not in the 6100 range. No, in the 6000 range itself. Okay, it will be somewhere around 606x. Okay, just at or around 606x, this is where we are anticipating a little break, and only when there comes two consecutive closings above this the 606x. However, chances are that the S&P 500 can even that it can even give up before hitting the 606x, because once it moves beyond the 604x, then this condition will start to appear after 604x. Okay, so if you are my Patreon community member, then through the daily updates, okay, I will keep you posted, I will keep you informed, so that you can make changes to your trade. One more thing, very important. If somehow the S&P 500 is pushed beyond 606x, then we need two consecutive closings above 606x, so that it can be confirmed that the S&P 500 will enter into 6100 range. Okay, however, again, 614x, 6147, the all-time high, S&P 500 will show fear, S&P 500 will show resistance towards 6147, and we can anticipate a fall. Now the question is that, okay, the fall will be there, but will this fall be heavy or not? Well, that will depend, because if the fall is seen from 606x, in that case it will be normal. It will be handled by the confluence zone that I have discussed again and again. Okay, and 597x is part of the confluence zone, okay, that I have disclosed in the last weekly technical analysis. So any fall as of now from 606x will be handled at or by the confluence zone. Okay, and then there will be a possible recovery from the confluence zone back to 6000 or this. However, if the S&P 500 keep on moving up and gives two consecutive closings above 606x, moves towards 6147, moves above 6100, and then there comes a fall, means any fall which is seen in that happens in between 6147 and 606x, in that case the confluence zone will be able to handle the fall only for 1 day, not more than 1 day. For more than 1 day it will be purely conditional, otherwise just 1 day. And if it loses this zone, then the next zone comes in the 58, okay, the zone that starts from 585x is strong support zone. Okay, in this manner the fall will be normal and heavy depending on the 606x. But whatever will happen, I will keep you posted through these daily precise updates if you are my Patreon community member. The weekly chart has shown us the long-term picture, okay, and also in a very clear manner that why there will be a natural resistance, okay, these things. But now it will be more clear on the daily chart, that is the next section. But before that, guys, I want to share this information with you that this is my S&P 500 knowledge transfer program. Whatever I know, whatever I have learned in last many years through my research, through my experience, I am going to teach each and everything to you through this S&P 500 knowledge transfer program. And also the name is S&P 500 knowledge transfer program, but whatever I am going to teach you here will be applicable to any stock, any index, any commodity, or anything that is traded in the stock market, because these are the basic principles, rules, or hacks, and these are applicable to whatever is traded in the stock market. So what I'm going to cover here, I will cover everything from basics to advanced. I will also share with you my modified technical indicators. I will discuss each and every technical indicator in detail and will tell you how it works. And each and every technical indicator is very different and is very important. Then I will share with you the trading strategies, the most important trading strategies, but in a different manner. Okay, then how to analyze the market, where to get the credible information, how to predict the future events. Then I will teach you the options from the basics to advanced, the options, each and everything. And I will also share with you the options premium calculator. I will teach you how to use the option premium calculator in order to calculate the premium value of any option. Then the support and resistance level, okay, for next 5 years. And you know that my support and resistance levels are respected by the S&P 500 and the Dow Jones. Then price prediction, how to predict the price even before. For example, if it is moving up, then to what level it can move up. If it is coming down, then to what level it can come down. Okay, price prediction. Then the trend analysis. I will teach you how to analyze that trend. This also includes the options, how to analyze that trend through the options. Then how to recognize the manipulation in the stock market, how to convert the trap into opportunities. Then the hacks, intraday hacks, short-term hacks, the long-term hacks. These hacks works almost 100% of the times with almost 100% accuracy. Then these are some basic terms and conditions, and this is my email address, and these are the snapshots of the meetings. So guys, whenever you want to participate in this program, or if you have any question that you want to ask, then this is my email address. Okay, you can simply send me an email. And also I have given the link to this Google spreadsheet in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. So I will start with the candle. Okay, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now this is the last candle of the S&P 500 formed yesterday on 6th of June. Now this candle, okay, there is no defined shape of the candle and it's a normal bullish candle. Okay, as such this candle does not indicate anything. Okay, however, because the candle is showing us that the S&P 500 closed above the 6,000 psychological mark. That is why, because of this closing especially, on Monday, irrespective of anything, there will be an initial or intraday bullish movement through this candle. That's it. Now let's analyze the Dow Jones. This is the last candle of the Dow Jones. Okay. Now here again, this candle is a normal bullish candle, but because of the formation of the candle, okay, in a manner that there were two red candles, two bearish days, okay, and on Friday there was a good gap up open above the open of this the red candle, and also the closing was above both of these the red candles. Okay, so especially because of this condition, we are anticipating on Monday an initial or intraday bullish movement, but again no gap up open. Okay, this means that through the S&P 500 and the Dow Jones, in both of these the cases on the daily chart, it is now clear that on Monday there will be an initial or intraday bullish movement. Okay, but no gap up open. Gap up open may or may not happen, but it is not confirmed through the daily chart. Gap up open was seen through the weekly chart of the S&P 500 only, not through the Dow Jones. Okay, this means that bullishness is there. Definitely Monday also we will see the bullishness. Okay, so this is through the candle. Now let's analyze the technical indicators. Okay, And why I am saying 80% bullish. So in terms of the technicals, S&P 500 is bullish through the Ichimoku cloud on the daily chart. S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the moving averages on the daily chart. S&P 500 is bearish through the MACD on the daily chart. S&P 500 is bullish through the stochastic RSI on the daily chart. Neither overbought nor saturated. Okay. What does all of this indicate? This means that the S&P 500 is 80% bullish on the daily chart. Simple. Okay. Now let's analyze the Dow Jones. And once again, guys, the MACD is bearish on the daily chart. Remember that part. Okay. Now, in terms of the Dow Jones, almost everything is same. It is bullish through the Ichimoku cloud, Bollinger Bands, moving averages. And the most important part is again, Dow Jones is bearish through the MACD, but is bullish through the stochastic RSI. Okay, exactly the same configuration, the same thing. Okay, that we have seen in the S&P 500. So Dow Jones is also 80% bullish on the daily chart. Now the thing is that both of these S&P 500 as well as the Dow Jones, if there comes a green candle of any kind, or a very thin red candle on Monday, okay, in that case the MACD of the S&P 500 and the Dow Jones will enter into the bull side. There will be a confirmed bullish crossover, or the MACD will turn bullish. So now what will happen when the MACD turn bullish on the daily chart of the S&P 500 and the Dow Jones? In that case, the S&P 500 and Dow Jones will then become 100% absolute bullish. Absolute bullish. Okay. And it is already 100% absolute bullish on the weekly chart, S&P 500. However, this will not help the Dow Jones to enter into 100% absolute bullishness on the weekly chart. No, because for that to happen we need a very heavy, like this kind of heavy weekly candle. This is the daily, but a very heavy weekly candle, like more than 2 or more than 3% bullish movement. Okay, then only we can anticipate the moving averages to give a bullish crossover on the weekly chart, otherwise not. So now what does all of this indicates? That the S&P 500 is 100% absolute bullish on the weekly chart, 80% bullish on the daily chart. Dow Jones is 80% bullish on the weekly as well as on the daily chart. What does this indicate? Okay, this indicates that any fall is expected to be limited. Okay, and the chances of recovery will be high, or the chances of recovery will remain high or heavy. When I say that the fall will be limited, this means, see, last week I mentioned that any fall will be handled by the zone that starts from 585x. Okay, the zone worked as it was expected to, because on Monday the S&P 500, after open it came down, it tested the zone, and then there was an intraday bullish reversal and it moved up and closed at 5936. Okay, this happened on Monday, on 2nd of June earlier. Okay, so this was the zone that was supposed to handle the fall, and it has actually handled the fall. That is why in my midday update to my Patreon community members on Monday, I mentioned that even though the pressure will remain on the market as is, but still the zone, this heavy support zone that starts from 585x, will hold the fall. Even if there comes a breach of this zone, then also SP500 will recover, will retrace back to the zone. And because the S&P 500 sustained and closed above the zone, especially above the 590x, this was the second thing, the second important thing in the bull side. Because the 590x opens the door to more and more bullish movement, okay, especially towards 6,000, the most important thing. But before this could happen, the confluence zone was there to stop the bullish movement. So that is why the confluence zone is very heavy, and this confluence zone will act as a support for the S&P 500 when it comes down. That is why on Tuesday also and on Wednesday also, again and again I've repeated that only in a very heavy manipulated case the S&P 500 can simply ignore the confluence zone and can move towards the 6,000. Otherwise technically S&P 500 cannot do this. Okay, it is not allowed to do this. it cannot sustain beyond the upper level of the confluence zone. This means that on Tuesday and on Wednesday it will remain up to or around confluence zone. It can close inside the confluence zone but not beyond the confluence zone. So because of this heavy gap up open yesterday on Friday, and then it sustained above the confluence zone for the entire day, closed above the confluence zone for the very first time. This was the very first time in last many weeks, months. Last time when this was seen, it was in February. Okay, after February we have not seen S&P 500 holding and closing above the confluence zone. Okay, so that is why this confluence zone has now become very important. Okay, this means any fall when the S&P 500 moves up, okay, either from 606x or from around near to the 6147, the all-time high, whenever there comes a fall, any fall will be handled by the confluence zone. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, each and everything. And guys, it is not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 opportunities in the top 30-40 companies of the US stock market every week, minimum 5 to 10 opportunities. And that's not all, because I also give the mid-week update. This is the technical analysis, the video technical analysis that is given every Wednesday or Thursday, and here I discuss all of the condition including the precise levels, precise numbers. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And when you scroll down, then you will see that there are these three levels or three tiers: level 1, level 2 and level 3. The level 1 and level 2 are same. The only difference is the geographical location. So when you subscribe either of these two, level 1 or level 2, then you will be getting all midweek update videos. Okay, the daily precise SP500 analysis, updates, movement, levels and zones, the stock market opportunities, minimum 5 to 10 every week. Now this level 3 is very special because whatever you are going to get in level 1 or level 2, by default you will get that in this the level 3. But other than that, I will give you a Zoom video meeting. Okay, there will be a Zoom video session, one-on-one, just me and you. And in this the Zoom video session, Zoom video meeting, I will teach you the entry and exit secrets of the stock market. Okay, when to enter, when to exit. Okay, one premium hack. This hack works almost 100% of the times with almost 100% accuracy. One trading or options strategy. Okay, the same accuracy. Then the modified technical indicators. Okay, to predict the movement even before it is seen. Then the options premium calculator. I will teach you how to calculate the premium value of any option. Okay, through a premium calculator. I will teach you each and everything when you subscribe or when you join to this the level 3. So in this manner, this level 3 is very special, very unique, and you are going to get much more than what you can anticipate or what you can expect. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, stock market opportunities, mid-week update, and they are very well aware of the movement of the market, what is happening, what has happened, what will happen, each and everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire US stock market from June 9th, which is Monday, through June 13th, that will be Friday. Now the most important event in the next week will be on Wednesday, because on Wednesday the inflation data. Okay, CPI and the core CPI data will be released. And this is the last known big data that is going to released before the FOMC event. Okay, so that is why the market will now get much more clarity and there will be much more clear picture through the inflation data, that what we are anticipating or what we can anticipate through the next FOMC meeting. This is the only big thing that is going to happen on June 13th, on Friday. The Michigan consumer sentiments data will be released. However, that data, most of the times the Wall Street simply ignores that data. That is why on Wednesday the inflation data will be the most important thing, okay, that is going to happen. This means that the stock market, the S&P 500, Dow Jones, Nasdaq, okay, has only Monday and Tuesday to trade bullish, to go bullish, to test these the bullish levels. Because if on Wednesday, if the data goes opposite, or if the data comes opposite to what the Wall Street was anticipating, means it shows that the inflation is moving up, then from Wednesday itself we can anticipate the fall, or a good fall. Okay, and this is exactly the same fall that I mentioned in on the weekly chart also. So in terms of the movement, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, what we know is that there are these are resistances and the zones, and here 606x, but before that 604x is there. Okay, then comes 6147. 6147 is the all-time high. Okay, so first, okay, I'm talking about the bull side, because on Monday we are anticipating a bullish movement irrespective of any open, and this is the bullish movement. Okay, and this is more special because for the first time the S&P 500 has closed above the 6,000 in last 3-4 months, and also for the first time in last 3-4 months S&P 500 has closed above the confluence zone. This is very, very important. Not 6,000 is not that much important, but the confluence zone is very, very much important. That is why every day, each and every day, okay, in the last week and before that, I kept on mentioning the confluence zone, that the confluence zone is there. Okay, any fall or anything that has to be happen, it will happen through the confluence zone. Any bullish movement will be restricted to the confluence zone, etc., etc. Again and again, the confluence zone to my Patreon community member through all updates. So this means that on Monday, most likely there will be a closing above the confluence zone. It may or may not close above the 6,000, because on Friday it closed above 6,000 at 6,000.36. Okay, so if on Monday, if it try to moves up but fails, okay, then it can close a little below 6,000, but that won't matter, okay, as such, because any closing is now expected to be at or above the confluence zone, and if all goes well, then the closing will be above the 6,000 psychological mark. Okay, now the most important question, that where it will be heading to. Okay, again, where it will be heading to, at first it will be heading to the 604x. Okay, this 604x is exactly the same mark from where, okay, earlier the S&P 500 has failed, not one but two times. Okay, 604x. Now does that mean that when it hit the 604x exactly, then it will fail? No, not necessarily. Okay, because now there are very heavy bullish sentiments. The weekly chart has also turned absolute bullish. This means that there may come a breach of 604x. Okay, but as I always mention, the closing is very, very important. Okay, if there is no closing, okay, above the 604x, it hits the 604x, okay, breaches the 604x, okay, but closes below the 604x. What does that mean? That means a rejection, clear rejection. Okay, no ifs and buts, simple a rejection. Okay, but now the thing is that the confluence zone is also there. Okay, confluence zone is in the 5,900 range. Okay, and the 597x is the part of the confluence zone. Okay, so this means that irrespective of anything, even if there comes a rejection from 604x, See, first of all, there is no guarantee. I'm not confirming that 100% it will hit the 604x on Monday. Okay, it may or may not, it depends on many factors. Okay, but if there comes a good gap up open around 602x, or in the 602x there comes a good gap up open, then yes, then definitely, okay, most likely it will test the 604x, but eventually then we will anticipate a fall. Okay, now, so this means that confluence zone is there. Okay, 604x is there. Then immediately after 604x, there comes 606x. Now this is something that I have also calculated through the other methods. Okay, and this is exactly the same that I have mentioned very clearly in the mid week update video to my Patreon members. Okay, I mentioned to them that this is what I have calculated, and in the 606x there is my calculated resistance level, and also through the other method, okay, I have calculated, then there is a potential. Okay, this will be the potential fall either in the 606x or in between 606x and the 604x. Okay, these are the two prices. Okay, it is expected to fall somewhere, okay, in between these prices or in the 606x range. Okay, the S&P 500. Now this means that this also means that if the S&P 500 moves up, okay, and by Tuesday it tests the 606x, fine. Okay, on Wednesday, let's say the inflation data, okay, it has shown that the inflation is now either stagflation or it is moving up. Then on Wednesday there will be a gap down open, good gap down open equal to high condition, and then the fall will continue. Okay, that kind of condition will also be seen. This means that on Monday and Tuesday, for now, we are anticipating 1% or around 1% movement on Monday and Tuesday. Okay, or means you can say simply before Wednesday, we are anticipating this much of movement, okay, in the S&P 500. Okay, because now back to back natural resistances. Okay, other than that, my calculated resistance levels are there. Okay, now if the S&P 500 manages to hold and sustain by Wednesday, okay, when the inflation data will be released, then what will happen? In that case, this will be the only case, because if the S&P 500 sustains, holds, okay, remains in the 6,000 range, okay, or around 604x by Wednesday when the inflation data is released, then it will remain in a condition wherein we can anticipate more bullish movement towards the all-time high 6147. Okay, so it has to. Wednesday will be very, very important, very, very significant. Okay, you must trade carefully on Wednesday, because once the data is released, published, okay, then there will be some surprise ups and downs. However, if you are my Patreon community member, then you need not to worry about anything. Okay, in the pre-market analysis, okay, I will tell you what is going to happen. This means that next week, okay, we can divide it into two parts. Okay, uh, bullishness, definitely bullishness is there. Okay, until Wednesday. If everything goes well in favor of the stock market, then Wednesday, and until then, from Wednesday onwards, Wednesday, Thursday and Friday, S&P 500 can remain bullish, can trade above 606x, okay, towards the 6147, that is the all-time high. Okay, if Wednesday, if there comes a failure, then maximum it will be somewhere around 604x or 606x or somewhere in between. Then it will come down. Any fall will be handled by the confluence zone. Okay, this is very, very important, the confluence zone. Okay, only when there comes two consecutive closings below the confluence zone, S&P 500 will come under pressure in a manner then that the S&P 500 will then be looking for the next support zone, heavy support zone, that starts from 585x. Okay, so it will lose this much. Okay, so that will be around from 60, let's say 605x to 585x. So it will be somewhere around 4% fall. Okay, but up to the confluence zone, fine. Yes, there is one more thing. If there comes any fall, Okay, but that fall is limited to the confluence zone. Then S&P 500 will remain in a condition to recover and to move up. It will remain in that condition. Okay, to recover and to move up means to go bullish. Okay, sorry guys, I forgot to mention, this was a very important thing that I mentioned to my Patreon community members also. Okay, so you need to understand this point. So this is about these the two moving averages. Two moving averages. Okay. So to my Patreon community members, I've already discussed this in detail in the midweek update video. Okay. But to all others, these are the two moving averages. One is 50, one is 100. Okay, 50-day moving average. I'm not saying 50 period may include hour, minutes or so. No, I'm saying 50-day moving average and 100-day moving average. Okay, these two are the standard moving averages that we use in the stock market. Okay, now whenever there comes a breach, sorry, not a breach, whenever there comes a crossover, whether it is bearish crossover or a bullish crossover, okay, then it confirms the movement in that direction. What kind of movement? Okay, let me show you. On 20th of March or 21st of March, there was a confirmed bearish crossover in these two moving averages. Then what happened? Okay, so on these days, there was a confirmed bearish crossover in the moving averages. Okay, this means that now the fall will be there, irrespective of anything. But still, the S&P 500 moved up. Okay, and then after forming a trap, okay, there was a fall, heavy fall. Now in the similar manner, if you notice, now there is a confirmed crossover in the moving averages. Okay, this has happened on Tuesday. Okay, a confirmed crossover in the moving averages. That was the reason why the S&P 500 managed to sustain even after getting this the rejection from the confluence zone. Although it closed inside the confluence zone, but still it managed to sustain, because last time when it tested the confluence zone, okay, it has failed because there was no such kind of support. This time there was the support. Okay, then this was there. Next day also it has sustained. Okay, then there was a fall. Why there was a fall? Because of 17% heavy fall in the Tesla. Okay, some other tech indices, sorry, tech stocks came under pressure, and there was heavy fall. But because we knew that the bullishness has now come into the picture, this bullishness is also supported by the weekly chart, also supported by the daily chart. All of the charts, lower level charts, upper level, the higher level charts are supporting the bullishness. This means that even though there is a fall, then also S&P 500 will remain in a condition to recover and to trade bullish. But here I would like to add one more thing, that this fall, okay, first of all, we were anticipating a fall up to the confluence zone. Okay, so even this a little more fall below the confluence zone, it was a surprise to all of us. Okay, because this was not expected. But otherwise, every day the movement, okay, up to this day, the upper movement, highest movement, this is the maximum in the bull side confluence zone. It was as was expected through the daily precise updates. Okay, so what I'm trying to say here is that even though there was a fall, okay, but this fall does not mean that the stock market or the S&P 500 will go bearish, there will be no bullish. No, we knew that even if there comes a fall for the entire day, or even for the next day there comes a fall, doesn't matter, it will retrace and it will go bullish because of these the bullish conditions. But also if you are my Patreon community member, then in the midweek update, okay, I have repeatedly mentioned that a confirmed crossover in these two moving averages does not mean that there will not be any fall. That is why I've given you this example of the trap. Okay, that there will be an opposite movement, there may be an opposite movement of fall, but that fall does not mean that market is going to come down, everything will fall. No, nothing is going to fall. Okay, eventually it will recover, it will go bullish. Now the purpose of telling you this, the 50 and the 100, is that now the S&P 500 is getting the bullish support, not just through the daily chart or the weekly chart or through the lower level technicals, but also because of this the standard practice that is followed in the stock market. And it is not just only for the US stock market, but the global stock market. This practice is always followed. Yeah, but now this bullish support or this bullishness can help the S&P 500 to move up to at most to 606x, okay, or to 604. First of all, it will be 604x. 604x will tell us, okay, that whether there are any chances for the 606x or not, or if it will fail in between these two, or if there are chances for the 606x, then how soon it can fall from the 606x. So if there will be any doubts, okay, then Wednesday these doubts will be very much clear, okay, and then we will come to know whether there are chances for a movement towards the previous all-time high 6147, okay, or not, okay, because if it fails from here, then that will be the natural. This will be the natural rejection, okay. One more thing you need to understand: even if the Wednesday, even if the data supports or the suggests that there will be more bullish movement, this does not mean that S&P 500 will move up in a straight line and will hit the all-time high. No, okay, this will not happen like this. Okay, even before it moves up, even if it breaches or remains above 606x, sustains above 606x, then also in between 6147 and 606x, somewhere in between these two, okay, it will fall. So I will give you the precise level, precise zone if you're my Patreon community member, okay. Whenever such kind of condition is seen, I will tell you that where exactly we can anticipate this fall to happen, okay. But this will be the natural reaction, natural rejection. And now if we consider best to best case scenario, okay, this is the best to best case scenario, that S&P 500 keep on moving up and it breaches the 6147. If it breaches the 6147, then this means that it is not going anywhere. Now there will be the recession, okay, it will now enter into the recession. This is the preparation for the recession. If this, the best to best case scenario, in a straight line moves up and breaches 6147, so that will be a clear confirmation for the recession. In that case, no need to think about this level or that level, then this means the recession. Because this is a standard practice in the market, that whenever action has to happen, okay, or recession has to happen, then the stock market will move up in a very straight, this very like in a straight line, okay, wherein this straight line will be like everyone think, okay, it is now moving up, there is no end, no stopping, then there will be extremely heavy FOMO. Everyone will participate in the buying and then fall and fall, unstoppable fall for many days, weeks, or months. Okay, so if you want to check this the same, then you can check just before the COVID fall. Okay, so you will see that there was a continuous bullish movement. Okay, and then all of a sudden start the fall. Then the 2007 2008 recession, exactly the same. Then 2016 correction, exactly the same. So every time, okay, the same pattern is followed, so there is nothing new, okay. But now what we know is that as of now, any fall will be limited to the confluence zone. And other than that, if there comes two consecutive closings below the confluence zone, this will confirm that now any more bullish movement is not going to happen. Bullish side is done. Whatever high it has made now, okay, so that was the high, it is done, it is coming down. It will be coming down to the zone that starts from 585x. Before that, 590x will act as the tiebreaker, okay. Will be coming down to the zone that starts from 585x, will sustain, will hold, will a reversal. But even before that, remember, confluence zone now has the potential and the capacity to hold the fall, and the S&P 500 will get, or there will be a bounce back from this, the confluence zone. Now it can hold the fall for 1 to 2 days, that's it, not more than that. Because if the S&P 500 remains around the confluence zone or remains below 6000 mark, okay, in that case the confluence zone will become weak and we will anticipate more fall, then two consecutive closing, then any fall will be handled by the zone. It starts from 585x, okay. It will hold for 1 to 2 days, okay. If there will be any bounce, then that bounce will happen from here to the confluence zone. But in this case, a bounce from this zone, from the zone that starts from 585x, will be limited and restricted to the confluence zone. This will not indicate that now it is going towards 6000 or 6147. No, just to the confluence zone and then a fall. Once there comes two consecutive closings below the zone that starts from 585x, This means that market has now entered into the recession cycle. Okay, now once again, this the recession that I'm using the word recession here. It is based on the recent FOMC minutes of the meetings. You can go to the Federal Reserve website. You will find the FOMC minutes of the meetings. Okay, open the note. Okay, minutes of the meeting, and you will see that the committee participants are expecting a recession in 6 months. It is mentioned there. Okay, so this will be more clear in the next FOMC meeting scheduled on 17th, 18th. Okay, and once the Fed this time confirms that yes there will be a recession, then there will not be any more bullish movement, because then the Wall Street and everyone will be very much clear that even the Feds have confirmed a recession, means there will be a recession. They cannot stop this. Then we will see the recession cycle. But again, it depends on the Federal Reserve Chairman. In the press conference of the Federal Reserve Chairman, this thing will be very, very much clear. Okay, if or when, okay, we are anticipating, okay, and the duration of this recession. Generally, it is expected to be 1.5 years, okay, of the cycle, and then the long-term bullish cycle will resume after the recession is over. Okay, in this manner, this will be the movement. So, Monday and Tuesday, most likely, it is expected to remain bullish. Okay, it may give a limited bullish movement, fine, not a problem. Wednesday, it will be very much clear whether it will move bullish or bearish, and then Wednesday, Thursday and Friday it will move into that direction. But if it moves up, then 6147 it will not be able to hit. Technically, naturally, through all reasons it will not be able to. But if it hits the 6147 and breaches the 6147, this means that almost like 99.9% recession is there. That is why the market manipulators, they are pushing the market up, okay, and are creating a FOMO. Otherwise, this was not needed, this was not expected, this cannot happen. Technically, non-technically, this cannot happen. Okay, so guys, if you have liked this video, hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.